Well, the independence of the Federal Reserve is instrumental to any market economy. And if that ever comes into question, the market is going to react very negatively. And this president continues to do that. And what he doesn't understand, that the more he tries to influence the Fed by public statements, the less likely he is to influence the Fed, because the Fed has to remain and be perceived as being independent.
Dick, is Fed Chairman Jerome Powell, are they doing a good job?
I think they're doing an excellent job. I think they're being very transparent. They talk in simple language. They have rationale for the decisions that they are making. I think they're making the right decisions. And I believe that the Fed, because we have a very strong economy, we have very low unemployment, we have reasonably low inflation, that the Fed does not need to continue to be accommodative. We have to get to the neutral rate, where it is neither accommodative or restrictive. I believe, no one knows what that rate is exactly. I believe it's somewhere between 3 and 3.5%. And then it can relax perhaps for a while to see which direction they want to go from there. But I think they have to get to the neutral rate in order to be prepared for a possible recession, because the higher rates are at the time of the recession, the lower that they can make them to stimulate the economy. But also, the growth that we've had demands that we get to the neutral rate.
The neutral rate, when you refer to the neutral rate somewhere between 3 and 3.5, you're talking about the Fed funds rate, which today is between 2 and 2.25. So that would imply at least 3, maybe 4, or as many as 5 rate hikes of 1/4 point until we get to that point.
That's correct.
So,
we may not need that. But I'm just saying, if you have to look at it today, I think it's in that. But it may be 275 as we get closer. But that would be my guess if I had to guess today.
You've been in a business most of your life that wrote a lot of mortgages and did a lot of home equity lines and did a lot of refis and so forth. What will those higher rates mean to that part of the banking business, mortgage business, and also to housing?
Well, first of all, mortgage rates today are still very low relative to historical standards. And many young people who are just in the mortgage business today think they're high because they're a lot higher than they were.
Right.
But historically, 7% was considered a reasonable mortgage rate. Now people worry about it, it's over 5%. But what I think people don't understand is that housing prices have been rising at 5 to 6% per year now for the last 4 or 5 years. A big reason for that is that the Fed has kept long-term interest rates below the market. They've interfered with the market. And when you have abnormally low long-term rates, housing prices increase, and vice versa. So I think we're going to see housing prices have already slowed. I think they're going to slow further. And so you might pay a higher rate on your mortgage, but you're going to have a lower price for your house. So it's not going to be as dramatic as I think people think at the moment. And it takes time for this to normalize. But I think 5% mortgage interest rates are still very low by historical standards.
Dick, can we bring you back to just the banking sector overall? You ran one of the nation's biggest lenders. Can you tell us, in your opinion right now, given the fact that we have a Democratic-controlled House of Representatives, and given the fact that we have the midterm elections behind us and the uncertainty about the Fed and its policies, which represents the bigger risks to the banking environment right now, a Democratic-controlled House or uncertainty about Fed policy going forward?
Well, I guess I don't agree with either one of your premises. I don't think there's a lot of uncertainty about Fed policy. I think they've said they're going to continue to increase interest rates over beginning in December and throughout next year. And I think that in terms of the political situation, we're in gridlock. And quite frankly, gridlock isn't bad for banks. We don't get a lot of positive things happening in the banking industry. So if there's no negative things happening, that's actually pretty good. And I think that's where we are. I don't think that if the Democrats who are in charge of the House want to put more regulation on, the Senate is going to say no. And if anyone in the Senate wants to have more deregulation, the House is going to say no. So not much is going to happen.
All right.
The action is going to be, if there is any action, it's going to be in government agencies. And they're working on a lot of regulatory items at the moment. And that's where the changes will be made. And I think they will be made in a very rational way. So I don't think there's much worry about either one of those situations.